Hello to all you dear traders. Today I want to teach you a very simple daily strategy that has an impressive win rate. When I started in the financial markets, I was looking for the hardest and most complicated methods. But do you know what the truth is? If I could go back in time, I would start with the very strategy I'm going to teach you today. Because one of the secrets to success in this market, contrary to what most people don't realize, is this simplicity. This strategy is designed to be so simple that it only requires one indicator, and there's no need to consider other factors. This indicator is the EMA 50, which is known as the 50-day exponential moving average. This line on the chart represents the average price of an asset over the past 50 days, with more weight given to recent prices. To implement this strategy, you only need a price chart and the EMA 50. We are looking for charts where the price is moving below the EMA 50, like this chart. Our strategy begins when the price breaks above the EMA 50 and a candle closes above it. The first stage of this strategy is completed with the price breaking above the EMA 50. Then we wait for a pullback, and we need to wait for the price to reach the EMA 50 and complete its pullback. Once this happens, we draw a horizontal line at the previous peak before the pullback. After that, we wait for the price to break above this horizontal line. It is important that the body of the candle closes above the line. When this condition is met, we make our entry to buy. However, even if these conditions are fully met, there is no guarantee of a successful trade. For this reason, we must set a stop loss to manage our risk. To do this, we use another EMA with a setting of 30 and place the stop loss below the EMA. Our take profit in this strategy is set at a risk-to-reward ratio of 1.5 to 1. While these conditions may seem excellent, there are several key factors that can invalidate a trade. First, if we have a pullback, but the price breaks below the EMA, meaning that during the pullback the price closes below the EMA, the trade is automatically invalidated because it indicates that the pullback is not clean and the price has managed to stabilize below the EMA. This strategy should also not be used in situations where the price is in a neutral or range-bound state. It should only be utilized in trending markets. Let's take a look at some real-life examples. The first example is the currency pair US dollar to Canadian dollar. The white line here represents the EMA. As you can see, the price was trading below the EMA 50 for a while until it broke. At this point, I became interested in trading. Then I waited for a pullback, which occurred here. At this point, I drew a horizontal line at the peaks. We then had to wait to break that line again. When this happened, I made my entry at the closing of the breaking candle. After that, I added the EMA 30 to the chart and set my stop loss and take profit. As you can see, the price reached our take profit. The main reason for the success of this strategy is that you must adhere to its simple yet very important rules. As long as you can follow the rules of the strategy, you can expect to make a profit. However, if you ignore even one of the rules and still decide to trade, the consequences are on you. Every strategy has a specific and reasonable win rate. By adding specific filters, we try to improve it and increase its profitability. In future videos, I will teach you how to effectively optimize any strategy and get closer to the ideal conditions of each strategy.